Well, happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties, with another Monday market moment. The last Monday of February, already almost 2 months through the year. And that's going to be an important thing to think about. 2 months, the first 2 months of the year. Rates are going up, not expected. And yet, and we'll kind of finish that and yet in just a minute or two. But first, let's look at the totals right now. 2,790 homes for sale throughout the county, down 8 from last week, and the week before that was up. Median list price 992, 944, down from the week before, with an average days on market of 50, one more day than the week before. Pending sales 2263, a big jump of 77 from last week. Median list price 849.9, higher than it was the week before. Average days on market 27, one fewer day. Months of inventories continuing its downward trajectory, down to 1.71 months of inventory. Here's the chart showing total actives and total pendings. And you can see that we were going down the first couple months of the year, and then it started going up, which it normally does, but a little blip last month. Kind of an opposite situation with homes going into escrow, up, and a dip and back up again. Here is the Stephen Thomas reports on housing charts for active listings year over year over the last few years. You see where we are now. Typically this time of year, it starts going down and then it kind of levels out and goes back up in the springtime, usually about a month or two from now. But we're flatlining. We're pretty flat when it comes to inventory. Here's the chart showing demand, number of homes that will go pending in the last 30 days, and it's flatter than it usually is. It's the lowest demand in the last few years, partially because interest rates are up, partially because there's just nothing to buy right now. Since last week, we saw 637 homes come on the market, down 87 from last week, a big drop, a little bit surprising. Median list price 929, lower than the ones that came on the market the week prior. New pendings 398, a jump of 27 from last week, also unexpected because of interest rates and so forth. Median list price 875, higher than it was the week before. Average days on market 19, one fewer day than the ones that went pending last week. New pendings listed within the last week 24. 6% of the homes are selling in a week or less. New pendings listed within the last 2 weeks, 239. This is the biggest percentage of homes that are selling in 2 weeks or less that I have seen since we've been recording that stat in the last couple of years. 60% of homes are selling in 2 weeks or less. That's a big number. How many homes closed escrow last week? 313, a drop of 43 from last week. 875 was a median list price, which is lower than the ones that closed in the week prior. However, median sales price 908 is up over the ones that went and closed escrow the week prior to that. 23 days is the average days on market, one fewer day than the ones that sold the week prior. The least expensive sale was in Borrego Springs, $90,000. So yes, you can still get a home for under $100,000 in San Diego County. Or if you want to live in La Jolla, you're going to have to pay $21,225,000. Well, not all of them, but that was the most expensive sale last week. Here's a chart showing new actives, new pendings, and new closed sales. A couple weeks ago, we saw a big jump in the number of homes that came on the market, and then a big drop again. So kind of more in line with what we normally see. Pendings dropped a couple weeks ago. Last week, they went up. Closed sales, kind of a big drop, but about average of what it was the week leading up to last week. Here's a chart showing median list price and median sales price. Biggest gap we've seen in a while in the median sales price versus list price. Homes are selling for much more than what they're being listed for. That indicates a lot of competition right now. Now let's talk about affordability. And this is again from the Stephen Thomas reports on housing. And a couple different charts I'll show. First one, interest rates impact on affordability. And you can see from a 5.5% interest rate all the way up to 8%. If your desired monthly income is $5,000, here's how much of home you can afford, given a mortgage payment of principal and interest, plus a 20% down payment. Right now, we're around 7% or so. So you can expect $940,000 home. But, if homes were much cheaper, say or interest rates were much cheaper, say 5.5%, you want a $5,000 a month payment, you can afford something over $1.1 million. So it definitely affects what you can afford to get. And people are definitely keeping that in mind when they're out shopping. And they may go from $1 million home to a $900,000 home, but they still want to buy something. Here is a mortgage payment on $1 million home. And you can see based on where we are with our median, which is about 908, then we're not that far off with an $800,000 loan. Again, looking at different interest rates and what your payment looks like. Interestingly, so at 7% right now, your payment would be about $5,322 a month. If interest rates just came down a 0.5%, your payment would be $5,057, almost $300 savings, which the extra annual cost compared to January 1st when rates were lower, $3,180 is what you would save every year. So again, and that compounds. So really, we need interest rates to come down to make it more affordable. So you would think, okay, if interest rates have gone up over the last couple of months, that would certainly affect affordability, which means people aren't buying as much, right? Well, here's the and yet. In the last 2 months, inventory is up 11%. Normally it's going down over the last 2 months, but it actually is up 11%. Pendings are up 25%. That's a huge jump. Number of homes going into escrow each week is actually climbing, even though interest rates are climbing too. 60% of homes, like I said, are selling in 2 weeks or less. The median sales price now versus 2 months ago, up 13%. There's just not enough homes out there. Inventory is super low, and that's what's causing a lot of this from happening. I had a home that went on the market in Rancho Penasquitos a couple weeks ago. We had 22 offers on it. A lot of people paying cash. They don't care what interest rates are necessarily, but a lot of people are still financing as well. What will happen when rates actually go down? That's going to bring more buyers in the mix. Hopefully it brings more properties in inventory, but we'll have to wait and see what happens. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions about this information, feel free to give me a call, send me a text or an email. Be happy to help. Look forward to seeing you next Monday in the next Monday Market Moment, the first Monday of March.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email to brian@devorerealtygroup.com.